Okay, welcome everyone to today's webinar where we are looking at the understanding of our Smarter SMSF deed. Now, we have people on here today who are members and are regular users of our Smarter SMSF trust deed. We have others that may have used it and acquired it through a pay-as-you-go basis for sort of one-off clients. And we may have people on here who haven't used it but may be contemplating it. So whatever the case is, welcome. And today is about helping you to understand some of the nuances and opportunities that naturally sit within the Smarter SMSF deed. So one of the things that I just want to preface today's session on, that it is a practically focused session on SMSF deeds. Now, we did run a session, so a CPD session on the requirements of SMSF trust deeds that we have uploaded in our learning platform as part of the Smarter SMSF platform that our members can go and watch at any point in time. So you just need to search for the SMSF deed there. And the reason why I raise this is one, obviously just to set an expectation about how we are looking specifically at the Smarter SMSF deed, but two, I think these two sessions watched in reasonable close period of time will actually help you to get more out of today's session and why we do what we do within the Smarter SMSF trust deed. So as I said, if you want to go away and have a look at that, not only will you get some CPD points for watching it, but you will also get, I believe, a greater insight into why the deed is structured in the particular way that it is. So I digress. So one of the things, I guess, from a Smarter SMSF point of view that we really hang our hat on in the industry and the way in which our documentation design is really structured is around this, what I call depth of knowledge that we have. And it's that depth of knowledge where we only focus on the delivering of SMSF documents that allows us to have a much greater depth of knowledge and therefore strategic and extended thinking in how we put our documents together. So in particular, our Smarter SMSF deed, as you will see from this next slide here, goes very much further than what the rules may ordinarily see and talk to. And this is one of the things that you do need to be quite cognizant of when you are looking at your deed and the requirements around how often you might need to be updating the deed as well. And I'm going to talk to this as we work through a little bit later on in these slides. But what you see is with a depth of specialization comes the fact that we are looking at many of these issues not only in a strategically focused approach. So we're looking for opportunities and we're managing risks around those opportunities, but we are simply ensuring that we are getting the maximum value that we can actually get out of a particular opportunity that exists. And therefore, when we look at the bottom here with this extended thinking, it's not only putting together a trust deed that ensures A, compliance, but B, addresses the opportunities that can be strategically applied with your clients, but where relevant, we will ring fence or provide solutions that come back to this core document that we call the SMSF deed. And again, I just put this here and focus on the deed, but it is naturally applied against our entire suite of documents. And today is to help you understand how we go about this extended thinking process where we have things such as special rules of the fund that are built into our deed. We have the concept of a paramount document. We have an automated deed service, which we are about that far away from finishing. But it's all these sorts of things that really step us out beyond what you would see in a more generalist provider where that breadth of documentation might be really good, but it doesn't achieve some of the outcomes that you may want for your SMSF clients as well. So what are we going to cover for you today. So what we're going to do is we're going to have a look at why keeping the deed up to date is important. We're going to go through and drill down into the Smarter SMSF deed, about it, the way it's been put together, the features of it. And again, we will go backwards and forwards around these features in the actual document to help you understand a range of measures that we have in there, or the rules that we have in there that allow you to get a greater awareness of why we have those in play. I want to spend a little bit of time looking at the voting and decision making, and again, give you some context around that, both where it is now, but also in our thinking as we go forward. So myself and Chris Hill from Hill Legal, who provides us with the legal support in this business. Him and I have done a little bit of work over the past 4 or 5 months around what we call key decisions. And I want to share with you a little bit about why we see that as important and growing in importance as we have a greater length of time with our clients inside SMSFs. And then we'll go through what you should be considering when it comes to the deed and I guess timing of upgrades and so forth, and then any FAQs. And whilst there are some that we've put together at the back, if you have any questions, please feel free to pop them in the chat or the questions, and naturally I'll come back to them as we work through today's session with you. So let's keep moving through this. So it was quite interesting because when I started thinking about this topic, I started thinking to myself, well, geez, wouldn't it be interesting to try to catalog somewhat the changes that we have seen, and therefore helping you to understand why the currency of your deed becomes so important. So we can go way back, and I didn't want to go too far back where it became somewhat irrelevant. But as you can see and work through, in essence, the decades that are displayed on here, there are substantial reform measures in those particular periods of time and other measures that will have dictated a trust deed in some way, shape or form needing to be upgraded. So we can go through the 2000s and we can clearly see the simpler super reforms. But interestingly, we saw super splitting being introduced. We saw TRISs being introduced, contribution splitting being introduced. All these sort of things warranted deed considerations. So not mandatory deed updates, but considerations around deed updates. And they progressively happened throughout that decade. We move forward into the 2010s here. And again, we've had this period of reform in 2017. So we can see, I guess, within these decades, we've had quite comfortably a significant level of reform every 10 years that would suggest that in the post-2020, we're going to likely end up in some sort of situation again that would require a kind of whole of practice deed upgrade, if that makes sense. But again, there are other issues that happened throughout that decade that are going to need to give consideration quite closely on a client or a specific range of clients. And again, whether it be specific to SMSFs like market valuations and collectibles and so forth, we've seen the introduction of new types of digital currencies with Bitcoin and the like. And we see this ever growing raft of case law that is having a large impact on the SMSF sector as well. And right now we are waiting on a high court decision of Hill versus Zuda, which again may come and require further consideration and changes to SMSF deeds based upon the courts, what the court's finding will be around the non-lapsing binding nomination, the operation of that in accordance with an SMSF deed. So I show this to you just to highlight the importance that getting a deed and then sitting on it is not necessarily the way that you need to go about managing your clients. It is going to require you to have to spend time on a regular basis, however regular that may be, and understand why we may need to make that change in the future. And some of this is going to be either prescriptive in the deed, or some of it may be non-prescriptive and therefore might not need a change. And I want to show you here an example as to where you may see some deeds going to need to have to change based upon the rules that are being commencing from the 1st of July 2022, as opposed to what we have looked at and reviewed around those changes from the 1st of July 2022 with the Smarter SMSF deed. So let me just flick across into our next screen here. So hopefully you can see this here. So what we did when we looked at the 2022 changes, so we know there's changes to the SG threshold, we know there was changes to the first home saver super scheme release amounts, downsizer contribution age changes, and the work test. There were some ECPI measures as well. But one of the things that how we have constructed the deed and particular terminology in one of these, and we'll talk a little bit about more shortly, is this concept of what we call an authorized contribution. So this is defined here as made on behalf of a member or members of the fund, and it means a contribution, whether by way of cash or assets in kind, obviously in specie, could include fund expense payments, forgivenesses of debt, other requirements that will be deemed to be a contribution in TR 2010/1, and could be paid by the member or on behalf of the member by an entity or government or regular employer-sponsored trustee, as long as we satisfy the superannuation laws. So quite broad in its approach, but ensuring that it captures those changes that may need to occur, or that do occur, I should say, throughout the life of the fund. So when we get to the requirements around acceptance of contributions inside the fund, what we have is Rule 6, and we look at the specifics of that and we say, well, based upon the concept of an authorized contribution, we actually don't need to make any changes here as a result of the work test being removed, nor do we need to in respect to the acceptance of the contributions or any of those measures that we've spoken about up above. Now, we do have guides that sit within our deed, and I'll talk to that shortly. Yes, we need to make adjustments to the guides, but the reality is the guides do not form part of the rules of the fund. They are simply there as a guide, and therefore that in itself is not going to need you to have to make an amendment just based upon the fact that the guide may still reference previously something to do with that work test. So what I wanted to just make very clear there then is that we do proactively go through and review the deed as you would naturally expect us to do. But we are then communicating back to you how and when we see amendments that are important that need to be made, give you the information around that to allow you to make the necessary decision to speak to your client about that particular issue. So that just gives you some context. We might actually put this into some sort of fact sheet if you want to then have available that you can reference to yourself and then utilize in discussions about clients that may need to look at deed upgrades in a future point in time. So a little bit about our Smarter SMSF deed. What is most important here, and we are one of the very few, is that we own all of our deed documentation and all the document IP and the platform that sits on our system. So you will see a range of competitors out there that may own the documents, they may own the platform, but there are very few of us that actually own all. And we see that as a really important part of what we do, because we're not going to get into conflict with ourselves, which means that if there are disputes, which we have quite clearly seen in the industry, and that will mean that you need to go through a process of changing providers or changing platforms if you want to keep that document, and it can create some significant problems inside of your practice because you don't have alignment in the documentation that may have been used over a period of time. Now, we acquired that IP. Obviously, one of my business partners, Ian Glenister, was the original proprietor in particular of those legal documents. Ian did retire last year, and as part of the deal with his succession, the business acquired all of that IP into the business. So it is an important part that we see. It also means now with Ian having retired, that management and legal sign-off process has changed internally within Smarter SMSF, and we now have Chris Hill and his business Hill Legal. So he's an SMSF specialist lawyer here in Victoria. He works with me and a range of others around the ongoing updates and legal sign-off that is required with the Smarter SMSF trust deed. So that deed itself comes in multiple forms, of course. So it could be used in a fund establishment with the deed upgrade. We also have a lost deed, which is available via the Smarter SMSF platform. And we have recently added a QROPS deed into the suite. Previously, we did have some resolutions that were available to use. But again, taking on feedback from our membership, one of the things that we did see, and we got this feedback, was we would like to have a specific deed because we have advisors that may not connect the dots between the QROPS status and the resolutions that you have as a special rule of the fund. So taking that on board, we were then able to pull together a special QROPS deed, but all of those can be automatically produced and delivered through the Smarter SMSF platform. And if you want to have a look at any of those, you can naturally go into the knowledge base, which is where I was just at, and download sample documents or view sample documents of those. Now, the other important thing to note here is then quite clearly as updates occur, we need to, and you need to, understand the version control that sits behind those. So let's flick back over to our other screen here. This one, I think I'm going to stay here, and then over to here. So what you can see here is that we have a change log. And what this change log allows you to do is to understand, since the last time that an update had been done based upon a deed that you may have within Smarter SMSF, you can go through and see what has been added or changed or removed to ensure that you keep the currency of your clients' SMSF's deeds up to date. Okay, so we did make some changes back in 2021, July 2021, for it to start. Naturally, there were some additional contribution types that were added, COVID release amounts and so forth. We had the best financial interest duty introduced. So we made amendments into the rules there to allow for that change in the covenant. Again, you can go in and you can see not only in respect to the most recent one, but the most recent history around what we have done in there as well. So you can always come in, simply search for change log in here, and it will give you the change log of the rules that we've done. We've got change logs obviously across a broad range of things that we do in here too, that you can come back to at any point in time. So let's go back again over to here. And naturally, as I mentioned before, all accessible via subscription or on a pay-as-you-go basis. So let's go into the features of the deed here. So first and foremost, and I touched on this earlier, we do have inside the rules of our Smarter SMSF deed, the governing rules themselves. So the clauses or rules that reference membership, trusteeship, the trustee powers, ability to pay pensions and the like, and our guides. Okay, so if we go into the deed here, what you will see is, if I scroll down, is that the guide here is the first part, the explanation as to how the rules operate. But the rule themselves is the most important aspect of the deed, because as you can see here in 1.1, the guide in the explanatory memorandum to the rules of the fund is designed for information purposes only and is not to be construed as forming any part of the rules of the fund. And if in any dispute, misunderstanding, or action regarding the rules, then you could take into consideration the guide to help understand the ordinary meaning of what the rules are intending to doing. So one of the things that we get from a feedback point of view is the rules are very handy, because it may be that it helps you to understand what the intent of the rule is intending to do, but also is quite advantageous for your SMSF clients themselves to get some context as to various powers and ways in which, again, trusteeship would occur, membership would occur, pensions being paid, death benefit nominations and the like. So prior to every rule that sits inside the fund, we do have this guide, and this guide is giving you greater insight into how the rule itself will operate. Okay, so that is an important step to remember. Now, we also have within the deed, and this is something that is quite unique to the Smarter SMSF deed, is this concept of adding things as a special rule of the fund. So the most common one that we see based upon the orders that happen on the Smarter SMSF site is around pension commencements. So let's just again go back into the deed here. And what you will see inside here is that where we have I'm pretty sure it's 1.7 here, yep, or 1.8, it allows for us to add any addition, variation, change, amendment, or whatever to the rules, and it could be considered to be part of that original rule. Now, the trustee here may also create an additional rule where under the rules of the fund, it may be for a reserve, a will, or a SMSF will or pension. So any additional rule here may become a special rule of the fund and declared by the trustee as such, and may not be varied unless there is consent between the trustee and member. So what we have when we look at the way in which a deed is prepared is that you want the deed to be strategic enough, but without being too prescriptive, that we want to, what's what I'm after? We want it to be not too prescriptive so that each and every time there is some sort of change in the law, that we must change with it. So what we have when it comes to the payment of income streams, and I might scroll down here to 25 at the moment, but what we have is the ability to pay an income stream in accordance with the superannuation laws and based upon conditions of release and so on and so forth. So where there are changes or tweaks to the law, Rule 25 will still allow for the payment of superannuation benefits in the form of an income stream, which means it's not prescriptive in the deed, and therefore we may want to prescribe a whole set of additional requirements or procedures inside the pension documents as an agreement between the trustee and the member. Because we are adding that information into the agreement around the commencement of the income stream, we want to annex that to the trust deed. And therefore, we do that by way of a special rule of the fund. And we note that in the pension documents that it is a special rule. And therefore, if we want to make changes to that, we can do so because the special rule requirements in 1.8 allow us to make that alteration where it is agreed to between the member of the trustee. And that becomes really important with things like reversionary pensions, where you may have, and I've spoken about this probably ad nauseum now for those that listen to me regularly, pre-1 January 2015 income streams for Centrelink purposes, age pension, Commonwealth Seniors Health Card recipients, and also those that may end up contaminating their taxable and tax-free monies. These are reasons why you would want to be able to change the contract of that pension midstream rather than actually commuting and repurchasing and prejudicing, like I said, maybe age pension, maybe Commonwealth Seniors Health Card, or also blowing up some of the tax-free and taxable strategies you might have done with multiple income streams. So you'll always be able to go into these documents and you'll see a version number, obviously that sits under that copyright, and obviously then understand what deed you are working with your SMSF client, okay? So really important part there around the special rules of the fund. As I said, it could be by virtue, the pension one's the most common, but there are others in which that special rule concept will apply, and the fact that it will allow you to make those amendments as well. The other thing that we identified as part of the rewrite of the Smarter SMSF rules when the super reforms happened on the 1st of July 2017 was introduce this concept of a paramount document. And this here is allowing for that individual to choose where there may be an inconsistency between the two documents, that you want a particular document to rank higher than another document. So what I'm going to do in here is just try and find the definition here. So you can see here a paramount document means a document or agreement that is made as a special rule of the fund. So again, we're looking at the pension documents, for example, that shall take precedence and priority in whole or in part over any other document, agreement, or resolution made by the trustee that purports to deal with a member's superannuation interest in a different manner. So on the basis that we have set out that we have an account-based pension that is running, and in the event that it stated a reversionary beneficiary, if there was some other document that tried to challenge the context of the status of that income stream, if it was chosen to be a special rule of the fund and that document is to be a paramount document, then that reversionary pension will rank highest over any other document that may conflict with that intended outcome. So it then does become important that with that paramount document concept, that if there are documents subsequent to that that may then become a paramount document, you quite clearly need to understand the differences and nuances between making such a change. But that paramount document concept, again, can be used in pensions, can be used in your SMSF wills, conditional pensions and the like that can be paid via the Smarter SMSF deed. So let's keep moving. Voting and decision-making powers. Again, something that we see as an important part of this process, and I'm going to come back and spend a little bit more time on that shortly. We also looked at the concept of authorised contributions before. So a lot of these things, as you work through the deed, really, again, it comes back to that 4 stages that I spoke about at the very beginning. So we are not only looking at how the law is applying right now, but we are saying strategically, we don't want to have in our documentation a requirement for contributions to be accepted on the basis that an individual has met the work test if they are over 67 years of age at 1 July. Because if that is ingrained, or something to the extent of that is ingrained in here, then you are going to have to go through and make those adjustments to the clients at that particular point in time before the 1st of July 2022, if they are to be accepted by the trustee going forward. So again, making sure that your provider, and why we do what we do here, not only thinks about the law, but thinks about the construct of that to take advantage of these rules. Now, SMSF wills and death benefit nominations, estate planning is a critical part of the Smarter SMSF deed. Most importantly, in here, there is an entire section dedicated to estate planning that you will see in here. If I just go back a step, sorry, I think it's back up at 11. So what you can see, part 10. So part 2, important planning considerations in here. So we've spent a lot of time naturally working through this, and this was clearly an area of expertise for Ian previously, but it gives you the ability naturally to pay all forms of death benefit nominations, from the basic sense of standard nomination to binding nominations, with a choice of either a 3-year renewal or non-lapsing. Again, our DBN form allows you to contemplate these sorts of issues. Importantly, it also allows you to contemplate not only at the primary level in the event of death, but on a cascading basis to give you some flexibility if that individual that was nominated predeceases the member who had that specific instruction. So from that point of view, it deals with all of the different types of nominations that are available and the terms in which that could be paid. Like I said, whether it's non-lapsing or in a lapsing sense. The other thing in here that we have spent a lot of time following very closely is quite clearly the case law decisions that we have seen, Cantor Management and others, around the acceptance of a contribution. And this is something that over time we've ultimately changed, where previously we required a trustee minute to actually follow the delivery of that binding death benefit nomination. So in essence, the effectiveness of that nomination would only be valid once it was accepted. We have now changed that, not only in the context of the deed itself, but then obviously in the documents that have been prepared with our binding death benefit nomination, so that once that document has been executed, it becomes valid at that point in time. So there is an acceptance of that upon the execution of that binding nomination, the appropriate or valid execution, which naturally needs to include witnesses around that as well. So again, you're wanting to understand the way in which the deed will ensure the validity of that nomination and how it needs to be accepted, and therefore the priority, as we spoke about before with that concept of a paramount document, as to whether you want that document to take precedent over another document or not. The other one that we get a lot of questions on ourselves is, well, what happens if we are going to do a deed upgrade, but we have a range of documentation already in place for our clients? So a DBN is a really good example here. So again, I'm going to flick back to our document that we have here, and I wanted to show you within the variation here that ultimately any document that you have in place, as long as it doesn't offend the current SIS Act or regulations, that amendment that is made to the deed will effectively continue on. So what I mean there is that if you have a document that is already in place, so under the terms of the original deed, and there is a variation that is done thereafter, then that document will continue to be binding on the trustee as if it was made pursuant to the rules of the fund that exist now. So that is an important other element that we have in here to ensure that you get continuity in the documentation that you have with your SMSF clients. The other thing around deed upgrades that I find people don't spend enough time and attention to, is probably the right word, is we go through significant levels of upgrades, and it could be right across the entire client base, but there has been little or no regard in respect to the company constitution. And we had, and I think he's actually on our session today, had a conversation with one of our members recently around deed upgrades. And then the question naturally was the importance of connecting constitutions to the deed itself. And one of the things that we then identified, and this is an important step, that we work with you to try and identify issues that may or not be presented. And what I said to Trent at the time was, actually here, we have a disconnect now between the governing rules of the fund, i.e. the fact that when we look at decision-making in here, we have one set of rules in terms of how it applies in the fund, but we have an entirely different way in which voting and decision-making is going to occur inside the Constitution. So what we're going to do is we're going to end up with not harmony here, but conflict if we don't get alignment between those two particular documents. So therefore, the result of that was we not only had to do our deed upgrades, but we made a change. So you just have the resolution to update the governing rules where you need 75% approval. And we then upgraded those constitutions to the Smarter SMSF one as well. Again, so we have that clarity between the constitution that governs the trusteeship of that fund, and then obviously the operation of the fund itself. And it's that connection that is not only important between the trustee relationship here in the Constitution, but right across a broad range of documents. We know from a legal point of view, the importance of binding death benefit nominations and how they have been challenged over time in the SMSF sector, about following due process to ensure that they are valid, to ensure that deed upgrades and adjustments to trustees and so forth follow the procedures that are set out within the governing rules. So these documents that we produce more generally on the Smarter SMSF site follow due process that the deed prescribes must be followed. We do these because we want to ensure that if they are challenged, they are watertight in respect to the way in which the SIS laws would apply or other laws that would be relevant to the particular circumstances. So you will have seen and heard me if you've watched some of our more recent sessions where we've run around building compliant SMSF documents, spoken about the importance of alignment around pension documents as well more recently. These are the sort of things that you need to quite clearly up the ante if you haven't already, because it's the connection back to the deed. If the ship hits the sand, one of Ian's former favorite sayings that he'd have if we do a presentation, if the ship hits the sand, you want to make sure that the production of those documents follow precisely what the fund's governing rules have required them to do. So let's go and touch a little bit on this voting and decision-making topic. So there are various ways, and I've pulled this slide out of that SMSF Trust Deed CBD webinar that I spoke about, because when you look at deeds, you will see different forms in which decision-making can potentially occur. Now, from a Smarter SMSF point of view, we have decision-making that applies from a constitution and deed perspective based upon item 2. So it is proportional voting. The vote of the shareholder, of the member, whatever that may be, is $1 of account balance is equal to 1 vote. So yes, there will be members in particular funds that will have a much greater and or controlling decision in that fund because they have a higher balance. That's not to say that that's going to be right for every client, but it's something that you need to understand with a deed, the decision-making that you want to have in here. And again, I spoke about that alignment to the Constitution. So one of the things that we are starting to spend a lot more time on strategically thinking about, so both Chris and myself here, is dealing with key decisions. And key decisions here can be a fairly broad spectrum of things that may relate to the deed or events of that particular fund. And the reason why I think this is becoming more and more important and why we are starting to spend more time looking at this and looking to draft something into, I think it's Rule 17 of the Smarter SMSF deed, is because we know that getting these decisions right will either A, ensure that those outcomes are met properly, or B, reduce the potential litigation of someone trying to contest that particular decision because of the clarity that is put in there. So what we are looking to do is prescribe a term of what we call a key decision. And what this is going to ensure, and this will be a separate document, but in the first instance, but it will allow for the trustee and the member to define what a key decision is. And based upon that key decision, what then needs to happen next. So it may be who can be a member of the fund, what assets can be held in the fund, whether you can start or stop a pension, whether a particular or when a particular event occurs. So if a member has lost capacity, and then any decision thereafter may become a key decision. Any changes to a superannuation interest, if a member passes away, appointing a replacement trustee, and there'll be a kind of a choose your own adventure with other options that you can add. So why is this important? Because currently, and in this generally within deeds, a key decision should arguably require some sort of higher percentage of approval from the members. So it may be with a 75% approval or a unanimous decision. So by default at the moment, the current resolution would be passed where more than 50% of the votes are in favour of that resolution. So what you may want to do is, if a primary individual inside this fund may have become incapacitated, do we want to, and this obviously is documented previously, but do we want to look to have a higher level of approval around the ongoing operation of the fund moving forward? Because we may have enduring powers of attorney of that incapacitated member, and that incapacitated member may actually have 70% of the fund's balance. Now, there may be a blended family, there may not be, but you now have, say, 2 adult children who are looking after dad under enduring power of attorney, now having absolute carte blanche decision-making powers, and they don't necessarily get along with that other member or members in the fund. And we could overcome that by virtue of a key decision that would now require either unanimous decision or a 75%, for example, based upon the event that had occurred under that key decision concept. So one of the other things that we're looking at is whether we contemplate, as part of that deed order process, an alternate voting mechanism. So give you the choice, something that we could certainly look to introduce. Again, this new form that we would be bringing in would naturally create a special rule and become a paramount document, and would therefore have to be read in conjunction with those rules. So as we initially did with the QROP requirements, we would be building in a standard clause or rule 17, but we would then have this special rule based upon the concept of a key decision, and those key decisions would be a separate deed or separate document that would set out when these key decisions are listed. These are the highest standards that the trustees must adhere to. I think most importantly, this is not something that's just going to be unique because we're seeing an increase in the number of members, but it's going to broadly apply, in particular as we have older clients and we have succession issues that we need to be contemplating, and therefore ensuring that we get the right outcomes for our clients. We think this is the right way to go. So be interested in getting your thoughts. You can give us a thumbs up or just type in the chat, thumbs up or thumbs down. If you've got any thoughts on this, please feel free to let us know, give us some insights into it. Like I said, we are going through this process at the moment. So any feedback around that, you can get that back to us. And like I said, this is a very similar framework to how we already do a number of these documents internally already around this key decision. So what should I be considering, therefore, around our Smarter SMSF deed? If you already have them or you're looking to change to them, what I would say to you is that just because we see a change in the legislation, it does not automatically mean that we need to go and get a deed update. But it does mean that we do need to be cognizant, as you can see in the bottom bullet point, that the review, we should be undertaking some form of regular review of the deed as part of standard business practice to ensure that clients' deeds are up to date. Now, if you're an advisor, quite clearly you're wanting to take advantage of a range of rules and opportunities that exist. So going to the deed as step one should be the most important thing that you do, because if you cannot do it in the deed, then you are not naturally going to be able to employ a particular strategy that the law would allow you to do so. But for others, accountants and administrators and so forth, that may not be top of mind, and you don't want to get to the point where you're having to quickly update and deal with issues off the back of changes that may have occurred 12 months ago or whatever, and you've found yourself in this particular hole. What I would be saying to you is look for issues in deeds that have prescriptive references, because it's the prescriptive nature of certain documents that is going to create the issues that will require you to do the deed upgrade. So we have seen deeds that had membership limits based upon 4. And therefore, to increase it to 6, you don't necessarily need to get the deed upgrade unless you're moving to 6. But this is the difference between these 4 levels that we've spoken about earlier today. Because at what I'd call the breadth document providers, those that reproduce the law and the basic concepts, they are simply replicating what the laws say. There is no strategic and conceptual understanding of what underpins the way in which that rule should be drafted. So the fact that they have simply looked at what section 17A says and says, well, you can't have no more than 4. As soon as those rules change, you now need to contemplate a potential rule change if you're increasing the number of members. Whereas the way in which Smarter SMSF talks about it is that it allows for any number of members that the actual requirements within section 17A would naturally allow for. And as is the case with the downsizer contribution changes, again, those sorts of things get bundled under our authorized contribution concept, allowing these to kind of seamlessly flow through without needing to go and change each and every year. So I say to you to ask that, does the trustee or member need to use that resultant opportunity that has risen from that legislative change? And if they do, then yes, you need to look at it. If they don't, then you can carry on for the time being. But we will come to certain points in time where the sheer breadth and depth of change is going to require a deed upgrade to occur. And we will go back to you and we will tell you the breadth and depth of those issues and the fact that we make those recommendations. And as we did in 2017, we produce all the content, all the templates, letters, and so forth to help you deliver a much simpler and standard structure to be able to work through those particular issues. And one of the other things that we're noting that and the requirements for updates, we are getting very close now to our automated deed service becoming available. And this is going to be much more ultimately in the long term than simply allowing you to automatically update funds on an ongoing basis. So you can see on here, there's a few different screens, but ultimately, I'll see if I've got it. I can't remember whether I've got it open or not. Yeah, so we do have in here the ability to add funds in to be able to manage. You can import your funds, whether it's via class or BGL, or you can upload XML files and bring in all your funds history. And what you will then be able to do is activate that client into a regular deed update service, which means once that client is active, you have your resolution, and then the history of those funds deeds can be managed and maintained in here. And if we then upload a new master trust deed, that master trust deed will then naturally be applied across all of the funds that are part of that particular service. So it is done by what we call a prospective non-lapsing resolution in accordance with the funds deed. And that in essence takes you out of the picture to making sure that things stay up to date, moves it on to us. And as we make those changes, that funds trust deed will remain up to date themselves. We do see from the perspective of this deed service, rather than simply just being an automated service that you can see in here, based upon the number of that you have and ones that are active and inactive and so forth. But we see this as an opportunity here to do and undertake manual reviews and undertake the deed process ourselves on behalf of our clients. So if you then want it to come in, you want it to be reviewed, you'll be able to go in, you'll be able to upload that history as we've spoken about here, and then we will be able to conduct that review and then upload that information back in here for you to complete that process. And again, using the integrations that we already have with Simple Fund 360, with Class, and we are shortly about to commence work on Supermate as well. So you'll have all three of the key SMSF softwares in the industry, allowing you to go through and manage your funds trust deeds, either in an automated sense or even in a manual sense here as well. And we're pretty excited by what we've got here, not only in the context of this from deeds, it will also incorporate constitutions, and then we see this rolling out even further across income streams, death benefit nominations, investment strategies, and the like. So we expect to have this done in the next couple of months, rolling it out into beta shortly. You can see just from me jumping on the live screen before, we are very, very close. So the other thing that I just wanted to touch on, and this is really a natural flow on effect. So as I said, we do have clients on here today, and they are active users of our document subscriptions. But one of the things that we are doing that comes next, I guess, is this consideration with our Smarter SMSF deed to go, well, are we looking to incorporate this with all of our clients inside our practice? And that's what this next session is about next week. And what we're going to do is explain to you through a couple of real life case studies, the journey that we've seen for clients to move into a document subscription and finding naturally the right one. So we're looking at this, it'll be around the economics, around the different staff involved, the way in which we support, and then how to actually get the pricing right to work out that benefit for you. So you will receive an email as part of the follow-up with today's slides, a one-click allowing you to register for that session. But I just wanted to, if from today's session, you want to kind of take the next step in the journey, this will be that next step in the journey, the webinar that both myself and David Devine here, our sales and development manager, will be going online and sharing with you. So as we get towards the end of today's session, I just wanted to put up for you a few FAQs. And if you've got any questions, feel free to add them in and I'll try and come back and answer them as we go along. But the first one here is, I guess, where can I find samples of stuff? So we have a comprehensive knowledge base inside our Smarter SMSF platform. You can see here, you simply click on it and it takes you across the knowledge base, and you can access sample documents, videos and explanations of a broad range of content that we have online. So you can access that if you want to find out a bit more. How can we track the changes that occurred? I've shown you today how and the ways in which we go about that change log and the information that we provide as a result of that change log. In terms of how often our deed is updated, we don't have any mandatory on 1 July each and every year the deed is current. We will move in line with how the laws need us to move. So a really good example of this is only in the past fortnight I had to go back and look at the the commutation rules within the income stream area within part 4 of the deed, because we have seen new regulations come out about excess transfer balance amounts with market-linked pensions. So therefore, need to go back in, check the deed, whether there needs to be any updates and so forth. We also are going through a process around 1 July because we need to update all the guides. we also are quite conscious of the Hill and Zuda decision at the moment. So there could be 2, 3, 4 times in any 1 year, subject to the events that are going on. Conversely, there could be 18 months where, based upon what has been happening in the industry, we have reviewed, but there isn't necessarily a change that needs to occur. So there is no hard and fast rule around that. Quite clearly, PDSs and the like are being updated each and every year to accommodate different rates and thresholds and so forth. But again, there's nothing hard and fast in that regard. In terms of Simon's got a question. So let's go to Simon. In relation to the deed service, do you need to review all of the current deeds and chain of deeds before you're able to use the service? How does an existing SMSF then start using the Smarter SMSF deed? Okay, so good question. And it probably comes down to some of this as well. So what we would want to ensure before we'd use that automated deed service is we'd want to ensure that the house is in order. So yes, we would be wanting to understand you've either done that previously, or there would be some sort of review that would need to be done and in bringing that on board to ensure that any amendment that is done thereafter is obviously going to be complying moving forward, because we don't want a break in the link of the chain and then basically all of those deed updates that have been done thereafter become irrelevant. So from that point of view, we would want to ensure that bringing on a client, and this happens in any type of deed update that would be done, we want to ensure that there is confidence that the deed update that is being done will comply. So we don't have a hard and fast rule around how that will work. We know there are different firms that have either a standard deed, and therefore we would say to you, give us a copy of that particular deed, and we will highlight in there any particular concerns that we have, if any, and if there aren't any, then you could quite comfortably jump on the platform and undertake those relevant deed updates that would need to occur. If there are concerns, then we would ask for the body of deed documentation to be provided to us, and we would we'd undertake some form of review and cast an opinion, in essence, around an initial opinion first internally here within Smarter SMSF around whether we perceive there to be any issues or not. And this is where I guess these next bullet points come in as a follow-on from Simon's question, because quite often we are dealing with, and again, we've had a number of members on here today go through this, where there are missing documents or problems in the chain of documents that then require an amendment. And this is where it then moves outside of what Smarter SMSF provides, but goes into Hill Legal, who will go through and make the relevant deed of rectification to ensure that we put some glue in and reconnect the chain of those particular documents. So that may occur because there is a missing deed. It may be because of some problem around the execution of those documents, or quite commonly, we have additional parties to documents that are either missing in amendments that have invalidated them or haven't been signed appropriately with those. Now, we also, where we do find those founders, principal employers or employer sponsors quite commonly, that if we want to remove those, again, we can provide a service with additional clauses being put into the documents to remove those parties from the operation of the fund, because in theory, they have no bearing to self-managed super funds in the current day. So I guess generally, Simon, we would want to ensure that we have absolute clarity that the trail of deeds is up to date. We don't have any hard and fast process around that. I think our deed service, as we move forward here, is going to provide you with an opportunity to manage that. If you want, you'd be able to upload those documents to us within the history. You'd be able to add those, and then that review could actually then take place. Subject to the software you use, some of that history can be naturally imported directly, And some of that we only obviously get the last deed, but all examples of the way in which we perceive our platform going forward in terms of the technology and the role that it can play to really provide a timestamp across the entire fund and the events that actually apply. And I think I've answered that last one there in terms of how often it's going to ultimately come back to some of the decisions that sit within the clients and the strategies of which would apply. So that is it from me, right on 3 o'clock. So as I've said, hopefully today has given you some real context into how the Smarter SMSF deed operates and why we build the way in which we build. We have a range of other events coming up that you can see there, not only about our document subscription, but also about our course and the changes that are coming up at 1 July, our next CBD event, and of course, our face-to-face events around the country in July and August. So our early bird does close at the end of this month. So if you want to take advantage of the current discounted price, I encourage you to get in before then. We've got some great numbers, in particular in our Melbourne and Perth events going very strongly. But as I said, get to any of those. I would look forward to sharing with you, and we've got the full agenda up on our SMSF Day page as well. So that is it. Thank you all for your time today. Hopefully you got some great insights out of today's session. If you've got any other questions, I'm happy to hang around now. Otherwise, I look forward to catching up with you at our next CBD event. Take care and bye for now.